Hello guys, a very good evening to all of you. Welcome back. So welcome to JAIIB CIB Prep. I hope you guys are doing well with your exam preparation and with your job and everything. So guys, first of all, really sorry for this particular delay. Actually, CIB examination was going on. So now we have done with your CAIB June 2025. So now the only focus is JAIB November 2025. Okay. So now we'll not miss anything or any targets and all. And I'll be providing you continuous concept classes, MCQs, practice, as well as unit-wise mock and full-length mock tests, right? So so far we have done with the sixth unit of your module A. I hope you guys are watching these particular one on regular basis. So today we are going to discuss unit number 7, which is all about economic reforms. Very important unit. You guys can expect at least downside 2 marks question based on this particular one, and this is something which is help you in there is one topic in your module D, which is economic reforms, module C, sorry, last topic. Okay. So where also this is generally going to help you. Okay. It is all about the overall economic reforms, which include transformation phase, which include economic transformation, real sector, that new economic policies, LPG model. Then we have financial sector, especially that there are different reforms in capital market, debt market, forex market, as well as banking sector reforms, right? So these are generally part of this particular one, which we are going to discuss in this session, right? So first we will be discussing the concept part. Just after that, we will practice a set of questions so we can build our understanding around this particular topic. So let's start with the basic discussion, which is economic reforms. So basically, when it comes to economic reforms, if you talk about the like with reference to Indian economy or Indian economic context, so the major reforms that happened during 1990s or 91, 92, that is also known as new economic reforms, and they are generally considered one of the most prominent reforms for Indian economy. That liberalization, privatization, and globalization. Okay. And they generally provided an economy-wise boost. So that time our overall reserve was only 10 billion US dollar, and with that we can do trade for only 1 week or 1 month. Okay. Nowadays it is around or it is almost after 700 billion US dollar plus. So with that particular amount, we can do basically hassle-free trade for next 18 to 20 months, right? So during that particular period, there was so many crises, or even there was some sort of problems with the government rules and regulations. There was so many restrictions on the private sectors and all. So we generally understood that particular need of the privatization and liberalization, and we start building connection with the international countries or international bodies, or like we it is simply saying it is something about the expansion of Indian economy. Okay? So we generally move toward to the open economic structure of the economy itself, right? So I hope everybody know about these particular one. So new economic reforms 1991, which is known as LPG model, that is called liberalization, privatization, and globalization, right? So we triggered by serve economic crisis due to rise in external debt and poor management in 1980s. This was kind of one of the worst period for Indian economy post independent. So basically there was lots of issues with Indian economy, and economy related activities. Our current account deficit was very high, and even the business environment was very restricted during that particular period. There was a huge gap between rich and poor. Okay? So to overcome with these particular one, we come up with the liberalization. When it comes to liberalization, it is something changing the laws. Okay? It is something like at present it is generally known as ease of doing business. Okay? So earlier there was so many restrictions was there. Okay? Like we have restrictions like that red tape system, lands related issues and all. So government they generally ease those particular areas with this particular reforms. So trade regulation to boost economic activity, open market for international investors, multinationals and remove barriers like industrial licensing and import restrictions with this particular step or initiative. Privatization, where we start giving license to the private parties in the core business areas. Earlier, there was limited to the governments. Again, maximum ownership in the core businesses was belongs to government, and government only can start those kind of businesses. So now after this particular one, we start giving license to the private parties also, and even in case of banking system also, we start giving licenses to private banks and all. Okay? And this sector also got evolved. Okay? So shift focus from private sector by reducing public sector dominance, emerged foreign practitioners and FDI, and fosters competition in Indian goods and services. The final one is globalization, where we start interacting with other countries. We start importing machineries, technologies from other countries, so we can convert our raw material into the finished good. So we can sell those particular finished good to the different countries, and we can support our current account deficit and all. Okay? So or even that is generally known as balance of payment. So, integrated Indian economy with the global market, integration of Indian economy with global market, increasing reliance on global trade and FDI, attracting foreign capital, technology, and knowledge to enhance domestic capacity. When it comes to the economic resources, so we have land, labor, capital, and entrepreneurship. So when it comes to the out of four resources, we have three resources in a sufficient quantity like land, labor, and entrepreneurship. Okay. But when it comes to the capital, okay, we do not have that much of money, or even like technological advancement was very least during that particular period. So we ease the norms, we allow private parties to invest in our economy, and we start importing wherever it is required, if it is machinery or technologies and all. So we can mobilize other resources of the economy, and this way we can increase our output so that we can reach to a like we can export goods from our country, and even we can build the self reliance or self sufficiency also, right? So when it comes to the banking sector, okay, so where we have two committees, they are very important. Every time you will see for sure one question for 1 marks or downside 1 marks, or it can be for 2 marks also. That is about the Narsimham committee. Okay? Every time, sometime you'll see question based on Narsimham committee 1, and sometime it is about 2. Okay? One is 1991 and 2 is आपका 1998. So basically, when it comes to Narsimham Committee reports on banking sector, so this is something related to banking sector reforms. Apart from Narsimham Committee, also we have so many other committees like Verma Committee on weak banks, Malhotra Committee on insurance sectors, and others. We'll talk about these particular one also. So the primary objectives of strengthening the banking sector, improving the asset quality, system and methods in banks, structural issues, and technological upgradations. These were some key highlights. Apart from that also, there was so many things. But before coming to these particular one, let's have a look around this particular one. This slide will give you half marks in your upcoming examination for sure. Because every time, like last question was based on the Verma committee recommendation on weak banks. So there was a straightforward question like which of the following committee was related to weak banks in India. Sometime we'll see around the Malhotra committee and others. So banking sector reforms in India have focused on improving efficiency, competitiveness, and stability of the Indian banks. To achieve these particular goals, government established several committees. One is Chakravarti Committee, which is related to monetary policy. Okay? So monetary policy. The another one is Narsimham Committee 1, which is आपका financial sector reforms, ठीक है, or banking sector reforms. Then we have Padmabhan Committee, which is regarding to review of supervision. ठीक है. Then again we have Narsimham Committee 2, Banking Sector Reforms 1997. It get the recommendations of Narsimham Committee was get implemented in 1998, or this is आपका one was established in 1991, and the recommendations of this particular one started in 1992. So you do not have to confuse around 1991 or 1992 or 1907 or आपका 98. ठीक है. Verma Committee, it was related to weak banks, 1998. Then we have आपका RH Khan Committee, which is harmonization of role of financial institutions and banks to assess and recommended improvement for the sectors itself. Okay? So many times you guys will see questions around these particular one. So these are the core committees with regard to banking sector reforms. Okay? Every time for half marks, this is something which is going to give you half marks in your upcoming examination. Sometimes it can be for 1 marks or 2 marks where they'll ask you to pair these particular one. Okay? Like let's say financial sector reforms, then the other side will be आपका नरसिम्हम committee, let's say Verma committee, weak bank. So you have to match those particular one. Understood? Let's move forward, guys. So now when it comes to the overall development of banking sector or economic developments, so we have different phases. Like we have pre-independence, we have liberalization phase, we have economic reforms, and the present one, right? So I hope most of people are aware about this particular one. This is something which is a static data, so we'll quickly go through this one. So phase one, it is आपका the early stage of the banking system. So the first bank in India, Bank of Hindustan. So Bank of Hindustan, which was established in 1770. It was established in Calcutta. So first bank, it is generally categorized as first bank in India. Alexander and Company who established this particular bank, and it is tagged as the first bank in India. Then we have establishment of other banks like State Bank of India. State Bank of India actually came in existence on 1st of July 1955. Originally, which is known as आपका Bank of Calcutta 1806. There was three presidency bank, Bank of Calcutta, Bank of Bombay, and Madras. In 1921, we merged all these three banks and we created Imperial Bank. Now, then after in 1955, Imperial Bank was taken over by the RBI and they renamed it as a SBI under SBI Act 1955, right? So we have Swadeshi movements after establishment of bank with Indian capital, Bank of India, Punjab National Bank. Then we have regulatory framework. RBI get established under RBI Act 1934, which start working from 1st of April 1935 itself. You guys will hardly see question around this particular one. In my experience, from last 4 to 5 years, there was no question, but they are given in your book, and even these things will get repeated with time also. Again, so you do not have to take any sort of tension for these particular one, and I'll not recommend any sort of rectification for these particular one. You will be able to remember these. Okay. So the post independence आपका phase 2 1947 to mid 80s आपका. So nationalization of bank, this was get asked this time. How many bank was get nationalized in 1969 and 1980? This was the question. Everybody know 19 bank, आपका 14 bank 1969. So 19th of July 1969, 14 bank with 50 crore rupees capital. 1980, six other bank get nationalized with an initial capital of 200 crore rupees. So nationalization of Reserve Bank of India happened in 1949. RBI was nationalized. Under RBI get nationalized on 1st of January 1949. Under the act was RBI transfer of public ownership. So the act was आपका transfer of public ownership. Please do remember this one. Some people get confused. Public ownership Act 1948. So 1948. Some people get confused with BR Act and this act. So RBI get nationalized under RBI Transfer of Public Ownership Act 1949. Then we have Banking Regulation Act. We passed Banking Regulation Act, which generally regulate and supervise bank in India. So to control and regulate banking system. Nationalization of bank 1969. 14 major bank was get nationalized in 1969, and in 1986 other bank was get nationalized. Formation of regional rural banks आपका 1975, and Prathama Gramin Bank was the very first RRB in India. So now we are moving toward the one state, one RRB. So number will come down, right? So 28 RRBs will be there. So after this particular mergers and all. Then we have phase 3, liberalization and reforms 1991 onwards. So this we have already discussed. So there was so many committees and areas. Narsimham Committee 1991 in 1998. So recommendations for financial sector reforms leading to a roadmap for banking sector liberalization. Liberalization and entry of new banks, licensing granted to private sector banks, prudential norms and Basel Accords. So introduction and adoption of Basel 1. So Basel 1 actually came in the year of 1988, but we start adopting that particular one just after the Basel 1 committee. Sorry, Narsimham 1 committee. So Narsimham, like when Narsimham 1 committee get implemented in the banking system in 1992, so we generally adopted that Basel 1 as it is. But later on, we made some sort of ACA changes. When Narsimham 2 committee came in 1998, so we increased the CAR level from 8% to 9%. As per the Basel requirement, Basel 1 requirements, it was actually 8%. Even today's still it is 8%. But Narsimham committee, they recommended we should maintain some additional capital because the risk weight is high or the dependency on banking system is high if you study the Indian economy, right? Technological advancement, we start working on computers and others. So emergence of internet banking, ATMs, mobile banking, focus on financial inclusion, Pradhan Mantri Jan Dhan Yojana, Payment Bank, Small Finance Bank, Insolvency and Bankruptcy Code 2016. So framework for resolving insolvency and consolidation of public sector bank, आपका merger of various public sector banks with each other. That is the something which is generally part of this particular one. Now present status, if you talk about the present status, so digital revolution is one of the major we can say achievements during this particular period, especially tool like AI, uses of AI and big datas, or UPI, or the other like 24/7 payment gateways and all. So further expansion in digital banking and fintech innovations, asset quality challenges. So NPA management and resolution, and nowadays like we for this particular one we come up with the PCA thing, prompt corrective action, and now there is no bank in PCA category. If you especially talk around the public sector banks and all, and even we also introduced the other areas like that bad banks and all, they recently come into force. So they generally solve these particular problems. Global integration, participation in global financial market. COVID pandemic was the period where we realized so many things, and that digitalization of banking system which got a boost during that particular period as well, right? So apart from these particular one, so we'll come to those other reforms also, core economic reforms. But first we'll talk about the your banking sector reforms, Narsimham Committee 1, which get implemented in 1992. So the committee was formed in 1991, but the recommendations of this particular committee which get implemented from 1992 aim to improve the financial health and efficiency of commercial bank in India. This is something which is very, very important. So I'll give double star to this one. For sure, you guys are going to face one question around this or the Narsimham committee too. Okay? So aim to improve the financial health and efficiency of commercial bank in India. Government appointed a committee on financial system under the M. Narsimham, leading to RBI issue new guidelines on income recognitions, asset classifications, and provisioning in 1992, focusing on credit risk and recovery management. Okay? So initially the major or the primary agenda of this particular committee was around the to strengthen the capital base of the bank, okay? And how we should deal with NPAs or the obligor risk or borrower risk, and what should be the provisioning criterias for these different type of loans or NPAs. That was the major concern. Okay? So apart from this, we also focus on some other areas like capital adequacy norms. So this was the very first time when we adopted Basel 1 CAR at 8%. Okay? So progressive reduction of cash reserve ratio and SLR. At that time, CRR and SLR was at higher side. So committee, they generally recommended to reduce these particular one, gradually reduce these particular one. Deregulation of lending rate, credit delivery, debt recovery tribunals. So we come up with DRT, debt recovery tribunals, appeal tribunals, lok adalats and all. A strong supervisory system, entry to new private banks, and merger and amalgamation. So these were some key areas or suggestions of Narsimham Committee 1 during this particular period itself. Okay? So basically 1998, then the second one. Okay? Narsimham Committee 2, 1998 आपका, ठीक है, chaired by Narsimham, to review the progress of banking sector reforms and strengthen the Indian financial system. ठीक है, so 1992, whatever recommendations was provided by the Narsimham Committee, so how bank are doing or following those prudential guidelines and all. So for that one, again we set up a committee, again that is led by the Narsimham. Okay? So during 1992, Narsimham Committee 1, there was lots of guidelines. So how banks are adopting these particular one, and how they're fulfilling the criterias and all, and what challenges they are facing, and what new things should be part of that particular one. So we come up with this particular one. Okay? So the major आपका second phase of focus, which is around the deregulation of branch licensing. Okay? So we start giving licenses to banks to open new branches and all. Okay? Implementation of prudential norms and disclosure requirements, strengthening capital adequacy standards. Okay? So earlier it was आपका 8%, now with आपका this with Narsimham Committee 2, so we start implementing at 9%. Okay? So Narsimham Committee 1, which were purely aligned with the BCBS recommendations to maintain CAR of CAR against your risk weight asset at 8%. But in 1998, with the recommendations of Narsimham Committee, or which is also known as Narsimham Committee 2, we increased that particular one to 9%. And today itself, it is 9%, right? So do remember this particular thing. This get asked so many times, the differences between these two. If they ask for the first, so 8%, and second, it was 9%. Okay? So 1998, the recommendations was first, strengthening of bank in India. So emphasis a strong banking system to managing domestic liquidity and exchange rate, recommending mergers of strong bank to enhance industry impact. Narrow banking, we start coming up with this particular concept again. So in first one, we talk around the private banking. Here we talk around the narrow banking concept and all, right? So address high NPA up to 20% of asset in some public sector bank by proposing narrow banking concept where weak banks would invest only in short term and a risk-free asset for rehabilitations. Capital adequacy requirement, it is increased to 9%. Recommended raising the minimum capital adequacy ratio to 9%. The banking system strength and loss absorption capacity to build that particular one. Bank ownership, again there was some recommendation around this. So committee noted government control over the bank management and ownership, limit bank autonomy. So recommending a review of board of banks to enable professional corporate strategies, reviewing banking laws. So the committee identified an urgent need to review and amend major laws like RBI Act, Banking Regulation Act, SBI Act, Nationalization Act and all to align with the banking sector current needs and all. Okay. Additional recommendations, आपका the committee also suggested faster computerization, technological upgradation, staff training, depolitizing banks, professionalism in banking, and review bank recruitment processes and all. So these were the recommendations. Now, if you have a question, ki Narsimham Committee 1 is important or 2, so both are important first of all. But if you'll ask me, give priority, so my suggestion will be Narsimham Committee 2. You have to have remember these particular one. So these pointers and all, they are very, very important one. And whenever we saw question around this particular one, first of all, every time you'll see the question around this one. There is one unit in your module C which is all about these particular one only. Okay? You do not have to re-revise or re-go through those particular one because the content is same and I have kept things in the detail also. Okay? So one dedicated units which is called banking sector reforms, which include all these particular things. So downside 2 marks question based on this, and mostly this question will be statement based. Statement based, like which of the following statement is inaccurate about the Narsimham committee too, where they'll mention about, like, let's say 8% of CAR. You just have to remember that particular one. All right. Next one. So prudential requirements here. So now, apart from this, there are some other financial sector reforms also. Okay. So prudential reforms in Indian banking sector. Okay. So reduce the overall risk in banking system by aligning international best practices, where we talk around the risk weight capital adequacy norms, updated accounting standards. Then we have differentiated risk assessment for the asset classes. Okay. So when it comes to CRAR, okay, which we have to maintain on our risk weight assets. Okay. So in case of any sort of default by the borrowers, we can compensate with that particular one. So our bank will not fall into any sort of trap. So if you are maintaining this one, accounting standards. So basically updated accounting standards which are aligned with the international standards in all, especially with IFRS. So we can also, our bank, they can have competitions with the international banking system, their profilings and others. And the third one is differentiated risk assessment for asset classes. Like we have segregation, standard asset, special mention account, NPA category and all. And accordingly, we have to maintain the provisioning also, right? So introducing mark to market valuation, M2M valuation is generally applicable to trading book of bank. Okay? We have three books. One is your banking book, which generally deal with deposit and advances. Another one is trading book, which is generally deal with the marketable securities. Like let's say if your bank as a proprietary position, they own some securities. So we cannot keep those particular securities at a fixed price. So we have to make corrections according to the market changes, right? So we introduce this particular one, fund deployment limit in sensitive market. Again, so it is also known as a risk exposure. So we are not going to have some sort of concentration risk on our portfolios. Okay? So we will have some sort of exposure limits. Key in this, in these kind of securities, we are going to invest this much of amount. We will not breach those particular one. And even these all are generally part of your board approval policy also. Okay? So board, they have to sanction the limits for आपका risk exposure, counterparty risk and other also, right? And transitioning to Basel II standards. Reforms like NPA, आपका non-performing assets controlling, and we have capital adequacy and diversification of operations. We start exploring some other ways. आपका like earlier, our total reliance was based on traditional accounting or traditional banking. Traditional banking means deposit and advances. Now we are start exploring the other ways also. So bank can generate more income and they can maintain their solvency and liquidity in the long term also. All right. So this is the one. Supervisory reforms. So now we are having some discussion around the other form of reforms which are not core to the banking but other areas also. So supervisory reforms, they can be related to banking or the other form of your other financial market also. So they are generally categorized as financial sector reforms. So for supervisory reforms in Basel II came in 2004, where they recommended there were three pillars. One is minimum capital requirement. Another one was supervisory review process, SRP process. Third one was market discipline. So supervisory review process is something involvement of central bank or regulatory authorities in managing all these entities, right? So supervisory reforms strengthen banking oversight through the board of financial supervision. Then we have nowadays we have two board आपका, one is for banking, another one for NBFCs, covering bank and financial institution NBFCs. Introduced camels आपका, this get asked so many times. Please do remember the abbreviation of camels. So it is capital adequacy, A for asset quality, M for management, E for earnings, L for liquidity, and S for sensitivity to market risk. So these was the parameters. In 2013, it get replaced with inroad system. But This was which was proposed by the BCBS, Basel Committee on Banking Supervision. So please do remember this abbreviation. Sometime examiner they generally ask around these particular things. And risk-based supervision for better regulation. Enhance internal audits, statutory auditors role, and corporate governance also. We also focus on due diligence on shareholders and introduce fit and proper tests for directors, the qualification and other things which will be part of this particular one. I hope you guys are getting these particular thing clearly. If you get any sort of questions, you can just take a screenshot or you can send me on chat, or else you can directly message me on Telegram. Okay? And you guys also have my number, so you can also send me on WhatsApp itself, right? Supervisory reforms. Now, competition reforms. Okay? For sure, you guys will face one question around the different reforms in India, and they have given everything like debt market, capital market, supervisory, competition, and other also, right? Apart from this banking. So address inefficiencies in banking sector by giving up operational autonomy to public sector banks and reducing public ownership. Allow private and foreign banks to enter and increase competition, and establish clear norm for entry of Indian private, foreign, and joint venture bank, enabling FDI and FPI in financial service supports, product and business diversification. So we come up with so many guidelines. Like now, like earlier, the most of the banks were run by the governments. So we liberalized things. We implemented the privatization also. Again, we allow private parties, they can also open banks, or even we also give invitation to foreign banks, they can also enter in Indian market. So but there was some requirements, again requirements, like if you are coming through the FDI in public sector, you can have maximum ownership up to 20%. In private sector bank, you can have maximum ownership till 74% after the government approval also. Okay. So these kind of rules and regulation, and even the minimum capital requirements or the other prudential guidelines regarding the establishment of bank in India. So if you met with those particular ones, so you are most welcome in our country to open up and to run a bank itself, right? Market reforms. When it comes to market reforms, aim at liberalizing financial market by removing administrated interest rate and reducing CRR and SLR. So earlier the rate was fixed by the RBI, but now it is decided by the market conditions. And even the rate of CRR and SLR was at higher side, so we gradually decreased that particular one. Okay. Discontinued ad hoc treasury bills and introduced market-based pricing for government securities. Okay. So earlier the rate was fixed, but now we have it is called open market operations, where buyers and sellers they generally participate, and they like the market will decide the interest rate rather than decided by the government itself. So develop interbank call money market. Interbank means आपका where one bank can borrow money from the other banks for overnight, and auction based repo and reverse repo through the NDS system, or else we can have open market operation to improve short term liquidity management, encourage transparency, market discipline, and efficient payment and settlement system of the banking system or payment and financial system. Institutional and legal reforms, so where we have lok adalats and all again, so or even that recovery system, DRT, DRAT and all, and then we come up with Surface Act in 2002. So included the creation of lok adalat, debt recovery tribunals, asset reconstruction companies, ARCs, and corporate debt restructuring mechanism to speed up the loan recovery. Enacted Surface Act 2002 आपका ठीक है, so 2002 the securitization and enforcement of financial asset. Okay, we'll be discussing this particular one in detail. Okay, this is part of your asset recovery in PPP as well. Okay, all these particular things. So Surface, which is known as securitization and reconstruction of financial asset and enforcement of security interest 2002. So this is the act where without the intervention of court, we can send a notice to the customer. Okay? It is applicable on only on collateralized loans. Okay? So where customer they have provided some sort of security or collaterals, it is not applicable on agriculture. So for the speedy recovery things and all, okay? Because there was lots many cases which were handled by DRT and DRAT and all. Okay? So bank were facing some sort of challenges. There was delays, and if there is delay, so the probability of repayment will get down. So that's why we come up with the SURFACE also. Establishment of Credit Information Bureau, like institution like CIBIL and all, for tracking borrowers' credit histories, and CCIL for secure settlements of financial instruments. Okay. Then we have Banking Ombudsman Scheme 1995 to offer low cost grievances or no cost grievances for the customers if they are facing some sort of challenges, or if there is some sort of exploitation of right of the customers, so they can approach to the grievances. Okay. So for that one, we have Banking Ombudsman Scheme. Now it is known as Integrated RBI Integrated Ombudsman Scheme 2021. Right. Technological reforms. This is something where we have come up with the IN InfNet, we have NDS, we have RTGS system, establishing a secure communication backbone and enabling real-time settlements and secure based trading. NDS is generally used for the government securities, where basically whenever government auction any security like treasury bills or bonds, and also participant banks, they participate through the NDS. RTGS, which is the real-time settlements आपका based, which generally help people means आपका parties, those who involve in those kind of trade, for to make the payments or to receive the payments, on real-time basis. Digital banking tool, use of ATM, internet banking, mobile banking, NEFT, RTGS, ECS, and others. IT Vision Document 2011-17, formulated by a high-level committee which roadmap guidance IT adoption in banking. Emerging technology like AI and machine learnings allow real-time data analysis and personalized banking services. Digital finance inclusion, like PMJDY, Pradhan Mantri Jan Dhan Yojana, eKYC, or and UPI revolutionized the access to the financial services. JAM Trinity, this get asked so many times also. JAM is stand for Jan Dhan Yojana. ठीक है, सो फर्स्ट आपका जनधन योजना, ठीक है, वी हैव आधार बेस्ड बैंकिंग एंड आपका मोबाइल बेस्ड बैंकिंग, ठीक है. सो इट इज कॉल्ड जैम ट्रिनिटी. ट्रिनिटी इज बेसिकली आपका ग्रुप ऑफ थ्री. So your Jandhan, Aadhaar and mobile promoted seamless financial inclusion using tech-driven solutions. Direct benefit transfers (DBTs) launched in 2013 to digitally transfer subsidies and benefit directly to beneficiaries. Okay? So like beneficiaries to farmers or any other parties. For that one, we generally use the DBT also, right? So debt market reforms. Debt market means bond market reforms. So when it comes to the bond market, it is one of the biggest financial market in the world. So even in India also, there are so many parties including आपका government, state government, municipal governments, corporate houses, banks. They generally use this particular market to raise long-term funds. Okay? So now for that one, we have debt market, or which is commonly known as bond market. So debt market reforms aim to deepen and modernize the government securities market through the several measures. Like auction system was introduced for better discovery. Foreign institutional investors were allowed to invest in government securities. Automated screen-based trading through NDS, institutional trading on stock exchanges and primary dealers were introduced to improve the liquidity and efficiency. New instruments like 91 days treasury bill, zero coupon bond, floating rate bonds, and capital indexes bonds were launched. OTC, over the counter interest rate derivatives like IRS, interest rate swap, and FRAs, forward rate agreements, were introduced. Negotiated dealing room, NDS, and real time gross settlement RTGS system was implemented for faster risk-free trading and settlements by a Clearing Corporation of India Limited, which is CCIL. Okay? This is something which is very, very important, right? NDS is a platform basically. It is a platform which is designed and developed by RBI. This, like whenever RBI come up with some sort of securities, auction of securities, or whenever RBI issue some sort of debt on behalf of government of India, so participants or the banks, they can or the primary dealers, they can file their bid, or they can make their bid through this particular software. Okay? While they make the payments, we have to use RTGS, which is again a tool of RBI, and for payment in settlement also, okay, we have CCIL, and payment in settlement which happen on basis of real time. Okay? Gross settlement, one-to-one settlements, right? Forex market reforms. Okay? So forex, which is governed by the RBI. RBI is generally known as custodian of forex market. So earlier we used to have FARA Act, Foreign Exchange Regulation Act 1973. Prior to that, we used to have the forex market was governed through the Defense Act after 1938 or 35. Okay. So then in 1999, we come up with the reforms which is known as FEMA Act 1999, Foreign Exchange Management Act 1999. The difference between FERA and FEMA. FERA was bit conservative. Okay. The primary aim or goal of FERA Act was to conserve the forex reserve. Okay. So basically, what we are doing through the FERA, we just want inward remittances, not outward remittances. But with the help of, or after this globalization and all, people they start interacting with other economies in the term of import exports or in term of other relation. Nowadays people in organization, they have some sort of global aspirations. To fulfill those particular one, they have to make payments in foreign currencies. But earlier there was so many restrictions by the FAIR Act, so we found that need to change in this particular one, and we made those particular changes with the help of FEMA Act 1999, right? So key reforms in forex market: shift to market determined exchange rate, replacing the fixed rate regime. Okay, so earlier it was like something where there is foreign exchange. There is one scheme I just missed. It was came in 1993, March 1993. So forex rate was get decided by the RBI itself. Okay. So we have some sort of closed norms and all, but we LERMS, okay, LERMS 1993. Okay. It is March 1993. Okay. So where RBI come up with this particular scheme, okay, liberalized exchange rate management system, we come up with this particular scheme. With this particular one, nowadays the exchange rate get decided on the basis of market factors. Market factors means demand and supply, right? So shift to market determined exchange rate system, replacing the fixed rate regime, rupee convertibility for current account transaction, and replacement of FERA to with FEMA to modernize the regulatory framework, development of new market instruments like rupee foreign currency swap, currency options, and the hedge tools. Authorized dealers were allowed to trade, borrow, and invest overseas under the certain regulations. Authorized dealers are basically, these are the institutions. Mostly they are banked. Again. So, like any party who is dealing in the sale and purchase of forex currency, they have to take prior license from RBI, and that license, the license given by RBI is generally known as authorized dealers. Okay? So we have different categories like authorized dealers. One, they have maximum right to deal with current as well as capital account transaction. Then we have authorized dealer 2 and authorized dealer 3. Mostly authorized dealer 3, which include the DFIs like Exim, SIDBI and all them. And we also have FFMCs, full-fledged money changes. While we come to the forex market wala unit, we'll definitely discuss all these things. Bank gain permission to set interest rate on non-resident deposit, NRI deposit, derivative for risk management, and manage position gap limit with RBI approvals also. Exporters, FIIs, NRIs, and Indian investor abroad were allowed to engage in forex transaction, including derivatives and forward contracts, subject to condition and underlying exposures. Okay? And one major reforms was your LRS scheme, liberalized remittance scheme आपका, which was also part of this particular one. Capital market reforms. Okay, so for this one, we have SEBI Act 1992, and this is also like, this is, we can categorize as second largest financial market in India after banking system, right? So capital market reforms aim to liberalize the regulate and expand the capital market. So establishment of SEBI 1992 as capital market regulators, improving regulatory effectiveness and limiting speculations. Open of market to FIIs, instrument like ADR, American Depository Receipt, Global Depository Receipt, and foreign currency convertible bonds, and exchange आपका ECBs, external commercial borrowings. Enable access to global capital. Focus on enhancing competitiveness, reducing information asymmetry, building technological infrastructure and minimizing transaction cost and all, reducing attracted increased portfolio investment. Additional initiatives include the creation of credit rating agencies, rise of mutual funds, merchant banking, IPO gradings, rolling settlements, electronic tradings, and shift from commission based to fee based mutual fund system, along with introduction of margin trading. So these were some major reforms. So once we'll come to the module D, capital market, stock exchanges, these all things we are going to discuss in detail, right? Chalo. Next one, economic reforms in India. So now this is the final chapter of the. So basically this is an overview how this Indian economy got evolved during that particular period. So we'll quickly summarize this one and then we'll practice the set of questions. So India's economic reforms were driven by deep rooted crisis that is culminated in early 90s. Jagdish Bhagwati categorized the long-standing issues into excessive bureaucratic control, means we have so many rules and regulations. Prior to this new economic reforms or LPG model, there were so many rules, regulations. Bureaucracy is something where we have so many guidelines, or the system which is run by the rules and regulations. Over production, investment and trade, inward focus trade and investment, as I told you about that FARA Act. So it was completely aligned with the inward focus trade and investment. We have some sort of conservative policies around that particular one. Insufficient public sector enterprises. They also question the public sector, the management of overall public sector enterprises. There was so many lack due to the low competition, or due to some sort of monopoly in the system, or that government ownership things, that generally they also criticize that particular one. All right. So with this particular one, these policies weaken the economy resilience, and by 90s, even a modest oil stock, even a oil shock due to Iraq invasion of Kuwait triggered a major economic crisis. So we face these many problems. Major causes of the 1990s economic crisis. One is higher fiscal deficit. Fiscal deficit is something where we have huge debt on the economy, right? Your income is very limited, your expenditures are very high. So fiscal deficit rose to 5.1% of GDP in the early 90s, 80s, to 8.4% in 1991. This is one of the highest one. Okay? So this is the one. So debt was domestic debt grow to 50% of GDP, leading to a debt serving burden. Then the other problem, adverse balance payment. Adverse balance of payment means where your payables are greater than your आपका receivables. ठीक है, balance of payment is basically how Indian economy is interacting with others. ठीक है, that imports and exports, right? So your credit amount is lesser than your आपका debit amount. Debit amount means while you are importing things, that means your money will go out. That means you have to make more payments in term of dollars or any other currency. You have very less export from the economy, that means you are going to receive very less amount. So that gap was very huge during that particular period. That is also known as, like, we have current account, capital account. So I hope so many times you heard about the CAD. So current account deficit, right? So current account deficit rose to 1.3% to आपका 3.69% during this period. Decline in remittances during Gulf crisis and loss of foreign investors' confidence worsen the crisis. External debt increased to 12% to 23% of GDP, and forex reserve fall to just 1.2 billion US dollar. So with this, you cannot do trade for 1 week even, right? Today it is more than 700 billion US dollar. That time it was only 1.2 billion US dollar. And if we do one big deal for the crude oil or anything else, it will wipe out, right? So that was the issue. India faced a potential sovereign default also. So we were about to default during that period. So high inflation averaged 6.4% to 11.3% in 1990-91, which is highest in India ever. During 2012-13, it was around 10.8%. but this is something which is highest. Cause included fiscal deficit, increased money supply, and poor agriculture productivity. So aftermath and reforms, okay, so after learning from these particular one, we come up with LPG. In response to this crisis, India launched major economic reforms starting July 23, 1991. These reforms included LPG, liberalization, privatization, globalization, covering sectors like industry, trade, investment, and agriculture. The 1990s reforms were broader and deeper than those in 1980s, leading to improved per capita income and economic growth. So that is something which is generally part of this. Okay. So basically, when it comes to the macroeconomics, we made some reforms in fiscal policy, tax reforms, and balance of payment reforms, monetary policy, inflation control, structural reforms, which include industrial policy, infrastructure reforms, agriculture reforms, and financial sector reforms. So these were generally part of this one. So this is all about. Now let's have a summary. Quickly summarize this particular one. Very important unit because you'll have so many new things from this one. So economic reforms focus on expanding private sector participation in India's growth. Since 1980s, India experienced reform influenced by Washington consensus, Washington consensus, which is bring by the World Bank and IMF, and later broader reforms in industry, commerce, and agriculture. When it comes to Washington consensus, it is something about where World Bank or IMF and all they had a meeting in Washington DC. So basically, they talk about how these developing nations they should work around their overall globalization or privatization things, or even overall the capital formation. Because during that period, most of the world developing and underdeveloping nations they were facing so many issues. So during this particular meeting, they come up with some sort of suggestions. Key economies, especially developing economies, they should work on these many areas and all. So that is generally known as Washington Consensus. So 1991 reforms were driven by crisis involving low foreign reserve, poor public sector reforms, high debt and inflation, and IMF World Bank conditions. Then we have green revolution and industrial modernization helped Indian transition to fast growing economy. Even today itself, we have a huge dependency on agriculture. 1991 reforms which come up with the LPG models. Banking reforms aim to make the financial system more efficient and stable. Currency reforms include shifting from fixed rate to floating आपका or market base. Increased foreign investment show confidence in Indian economy and reforms efforts. Right. So this is all about your आपका unit number 7. Now time for the practice. So first we will be practicing your Macmillan question. Very easy question, and you guys are not going to face these type of question in your examination. This is just for the reference purpose. First question, which is not one of the primary pillar of 1991 reforms. Who is going to ask this type of question, right? So it is आपका LPG, liberalization, privatization, and globalization. That means automation was not part of this. Narsimham Committee on Financial Sector Reforms was related to which sector? Banking sector reforms. Which is not a part of the supervisory reforms of CAMELS, full form. Capital adequacy, asset quality, management effectiveness, earning quality, liquidity, and sensitivity to market risk. So, capital adequacy, mergers was not part of this particular one. The rest all are part of this one. Which among the following is not an instrument used by Indian corporate sectors to access funds from international market, not an instrument. So we use ADR, American Depository Receipt. We can use foreign currency convertible bonds. We can use GDR, Global Depository Receipt. But IPO, companies use IPO to raise funds from the domestic market, not from the international market. All right, clear guys, everyone? Chalo. Now some exact exam level question. Okay? So based on the PYQs as well as the expected question. So first question on your screen. So, which of the following statement about economic reforms in India are correct? So now this kind of question you can expect for 1 marks and 2 marks. If there are 4 to 5 statement, 2 marks, otherwise it is for 1 marks. And our focus should be around the 2 marks question. 1 marks and half marks will automatically get covered. Economic reforms aim to increase government intervention in market to correct distortion. No, it is to decrease. Think when it comes to economic reforms, LPC, that liberalization, which is the decrease the government intervention, not increase. So first statement is wrong. Economic reforms of 1980s were influenced by the London consensus. No, it was Washington. We just talk about this particular one, IMF, World Bank and all. This is also incorrect. India's 1991 economic reforms were triggered by factors such as adverse balance of payment, true, low foreign exchange reserve, 1.6 billion, true, high government debt, true, 100% correct. The 1990s economic reforms were broader in scope compared to limited deregulation in 1980s, 100% true. So what we have to find out, we have to find out आपका correct statement. That means 3 and 4 are true. That means option C should be right answer for this particular one. Correct here? Option C. So one was incorrect. Why it is incorrect? Economic reforms focus on reducing government intervention. Two was incorrect. Washington consensus was the which generally influenced the 1980s reforms and all. Right. Next one. Which of the following is not an objective of 1991 economic reforms? Half marks or 1 marks question. High economic growth was objective. Lower inflation was objective. Increasing restriction on private sector, it was not an objective. Maximizing nahi, minimizing. So 3 and 4. 3 and 4 means D will be right answer. These were not the objective, right? So who will wish to increase the current account deficit or this? So our objective was to decrease or liberalize restrictions on private banks and to decrease the current account deficit, not increase. So D will be right answer for this particular one. Next one. Consider the following statement regarding economic reforms of 1991 and you have to find out the correct statement. And if you correctly answer this one, you'll get 1 marks. So first, liberalization led to a removal of industrial licensing in most sector except those related to security and strategic concern, 100% true. Like security and strategic concern is like railways or atomic energy and all that. Privatization resulted in complete withdrawal of government from all public sector enterprises. No, there is no complete withdrawal. So this is also wrong. Globalization facilitated the entry of foreign capital, technology and knowledge, boosting domestic industrial industries and international trade. True. 1 and 3. 1 and 3 means option A will be right answer for this particular one. Easy, understandable. Next one. India, for sure, 2 marks question again. India's economic liberalization 1991 was influenced by multiple factors, leading to significant reforms. Analyze the following statement and identify the correct statement. So you have given 7 statement and about the new economic reforms or 1991 reforms, and you have to find out the correct statement. Statement 1. India's planned economy from 1996 to 1980 resulted in an average annual growth rate of 3%, much lower than the Asian tigers. Before liberalization, India's export were primarily focused on USA and Europe market. No, it now it is your USA and Europe market. Earlier it was USSR, that Soviet Sangh, Rus and all thing. So this is wrong. The Gulf War 1990 caused crude oil prices to more than double, severely impacting the India's import bills. 100% true. By June 1991, India's forex reserve had dropped less than 1.1 billion, covering only 3 weeks trade. 100% true. IMF granted 3.9 billion loan with the condition of economic liberalization requiring significant financial sector reforms. Narsimham Committee 1 recommended maintaining high interest rate control to ensure financial stability. Wrong. it should be आपका low interest rate. One of the key banking sector reforms was the establishment of four-tier banking structure with large bank at the top and rural bank at the bottom. So 1, 3, 4, 5, 7. 1, 3, 4, 5, 7. A only will be right answer for this particular one. Okay? This level of preparation if you are doing, believe me guys, you are going to score very, very good marks in this particular subject, right? So A, which is the right statements or which is the correct answer for this. This was a half marks question in your recent examination. So which committee was formed in 1998 to address weak bank? So weak bank, when it comes to weak bank, so it is your Verma committee, right? So Verma committee was related to weak bank. Which of the following statement about Narsimham Committee 1, 1992 and banking sector reforms are correct? Correct statement for 1 marks or 2 marks. The committee recommended the introduction of capital adequacy norm in banks. True. The reform led to the establishment of DRT to improve the loan recovery. True. Committee suggested an increase, no, decrease in SLR and CRR. It was decrease in SLR and CRR. One of the key recommendation was entry of new private banks. It is one, so answer yes. The reform introduced a strong supervisory system to monitor banking operation. Yes. 1245. 1245 means option B should be right answer for this particular one. Correct hai? Next one. Which of the following statement about second phase of banking sector reforms Narsimham Committee 2 are correct? 1 marks question or half marks question. The reform emphasizes the phases implementation of international best practices to reduce banking system risk. Yes. Focus area of the reforms include NPA, capital adequacy, diversification of operation. Yes. Reform led to immediate privatization of major public sector bank. No, there is no such suggestion. Those wrong. 1 and 2 only means option A will be correct answer for this. Next one. Camel's rating. So Camel's rating implemented as a part of banking system supervisory reforms. So Camels stand for what? Tell me what will be your right answer. Okay. So capital adequacy first. Then we have asset quality, management, earnings, liquidity risk, and sensitivity. Okay. So option yes. So option D, capital adequacy, asset quality, management, earning, liquidity, and sensitivity to market risk. D, without any doubt, it will be the right answer. In 1998, government set committee on banking sector reforms in India under the chairmanship of M. Narasimhan in order to review the progress of banking sector reforms to date and chart a program of financial sector reforms necessary to strengthen the Indian economy. This. Which of the following about the market, institutional, legal, and technological reforms in banking system are correct? So first, market reforms include removal of administrated interest rate and introduction of a pure interbank call money market. True. SARFAESI Act 2002 was enacted to facilitate faster recovery and restructuring of bad loans. True. Banking ombudsman scheme was introduced. No, it was not into this. It was in 1995. Okay, 1995. So 1995. So this statement is wrong. Infinet was established financial sector communication backbone. Yes, 100% true. JAM Trinity Jandhan Aadhaar Mobile has been instrumental in promoting financial inclusion. Yes. The introduction of artificial intelligence in banking has reduced the need for real time. No, it has increased the need for real time data analysis. This is also wrong. So, what will be your correct answer? 1, 2, 4, 5. 1, 2, 4, 5 means option A only should be right answer for this particular one. I hope now you guys are able to answer these one because all these information we have discussed earlier. Whatever required for this examination, I'll include that part and will not do excess, will not do less. It will make a proper balance so you guys won't face any single issue in your upcoming examination. Reforms of insurance sector. Malhotra committee. ठीक है? So, आपका Sri R.N. Malhotra committee. B will be right answer for this particular one. And with the recommendation of this committee only, further we form the IRDA. Okay, IRDA, Insurance Regulatory and Development Authority of India Act 1999. During the financial crisis, the biggest challenge faced by financial market is financial crisis. Whenever any economy went through any sort of financial crisis, so what challenge we face? Increased speculation, no. Excess liquidity leading, no. Breakdown in trust and loss of liquidity. Excessive government regulation system, no. I'll go with option C. Should be right answer, yes. Because see, people they get some sort of like the risk probability got increased, people get scared, right? People means investors and all, so they start withdrawing money and all. What was the Narsimham committee's second recommendation regarding capital adequacy requirement? So second, committee second. If it is one, so your answer will be option A, but it is about the committee recommendation to increase it to 9%. So B will be right answer for this particular one. Next one. Okay, this is all about your unit number 7. I hope you guys enjoy this particular discussion. So now I'll be coming up with regular session. Simultaneously, I'll start with AFM also, and I'll promise ki like you'll get everything. You do not have to purchase any book or anything else. You'll get everything at this particular platform. So if you guys are facing any challenges with anything, so just do let me know. Do ping me on Telegram or WhatsApp or on app itself. So I'll try to resolve that particular one as soon as possible. And the end goal is we have to crack this particular examination in single attempt. And believe me, guys, if you follow these particular thing, no one can stop you to score very good marks, right? So this is it from like today's session. I'll see you tomorrow at same time, and we'll be discussing unit number 8. So unit number 7 was a bit lengthy. There was huge discussion and all. Otherwise, like there are few topics which have limited content. Module B is very lengthy. Module D is very lengthy because these all are concept driven and all. A and C, they are like they have a limited content, so we can easily easily cover all these particular one. All right, guys. So this is it. Thank you for joining this session. Thank you for watching this session. Bye bye. Take care all, and wish you all the very best for your preparation. Thank you.